S&P futures hits new all-time highs, gold hits new all-time highs, and the dollar weakens to a 4-year low. That pretty much sums up everything we need to know as we get the session started, but let's quickly take a closer look anyway. In terms of overall risk sentiment, the mood is cautiously optimistic, I would say, at the moment. One of the key takeaways right now is that FX volatility remains high, obviously led by that continued drop in the US dollar. A few offhand comments that we've had from President Trump was obviously enough to hit a bit of a nerve when it comes to the US dollar, obviously seeing vols rise and the dollar pushing lower yesterday. And as we know, when volatility rises in the US dollar, it normally stops being an FX only story and starts spilling over into everything else, as we've seen so far today. Now, let's take a look at some of these markets in a bit more detail, starting with equities. I mean, how sexy is that? A 7 handle on the S&P. I mean, we should just stop the video here. It's nothing more to say. Just a beautiful run to the upside, new all-time high. And in terms of overall drivers, look, it's plentiful when it comes to the S&P right now. We've got the ongoing dollar softness. We've got steady growth expectations, solid expectations for earnings. We've got a couple of tacos flying around every couple of weeks where we have the escalate to de-escalate situation going on. Despite that, there has been a couple of negative things. We obviously have the Medicare payment proposals coming out. We had the announcement of 30K jobs cuts being announced by UPS, but the overall mood, despite those things, have remained very constructive. Now, it hasn't been a very happy day for everything yesterday. We had the S&P up, but the Dow pushed lower, mainly on the back of United Health, which posted some pretty bleak revenue expectations, and that saw the stock down, I believe, close to 20. Look at that chart, close to 20%. Just an ugly drop to the downside. And this is a quick reminder of why this matters more for the Dow compared to something like the S&P, is because of those weightings, right? If you take a look at United Health, we can see United Health is sitting at about a 3.5% weighting for the Dow, which is why it matters more for that compared to something like the S&P. Also, a quick reminder, we've got more earnings coming up. Big focus will be obviously on Microsoft, things like Tesla, things like Meta, all coming up after market, after the FOMC. So a lot to focus on. Now, in terms of FX, the main story right now remains the dollar downside. I mean, the dollar just cannot catch a break. We've had a lot of reasons for the downside. Obviously, the more recent ones was the comments coming out from President Trump suggesting that he's fairly comfortable with the recent move lower that we've seen in the dollar. Of course, before him, Friday's intervention chatter has also been a recent driver for downside, alongside the ongoing issues with current US foreign policy, the dreaded idea that we might be facing yet another government shutdown, which would be absolutely horrendous. Let's hope we can avoid that. But all of those things are obviously key drivers. Looking at something like dollar yen, which has been a key focus this week, the pressure remains, currently trading at 152.60. It will be interesting to see how this one trades out of the FOMC, but I have more to say about that in a second. Now, also on the FX side has been the Aussie dollar, which traded, very uninspiring, I would say, after that hotter than expected CPI data. Now, despite the hotter CPI data, I think the fact that the Aussie dollar couldn't rally is quite telling here, right? We saw rates markets jumping to the idea of pricing in a higher probability of a hike, now sitting at 18 basis points implied for next week and 72% probability implied, and yet the entire move in the Aussie was faded. Now, I think that shows that a lot of the recent high expectations are already in the price at this stage, and that means that the setup into next week's RBA is quite interesting. With everything that is priced for the RBA already, I think there's quite a high bar for the RBA to basically out-hawk what the markets have already priced in. So I think the risk for the Aussie next week is twofold. Firstly, if they don't hike, that would obviously see immediate repricing of that hike, which will be, we'll see a big move lower, or should see a big move lower in the Aussie if that happens. Secondly, even if the bank does follow through with a hike, we need to remember that the prior commentary from the bank wasn't excessively hawkish, right? They were very reluctant in terms of talking up the idea of much hotter inflation. They basically came out saying the most recent comments that we had for them coming out saying that they think it's temporary. There's no way in knowing if the inflation data that we'll be getting now will be long term. There's very good arguments to basically just keep the current rate and keep it at the current level for an extended period of time. It should be enough to stabilize the economy. So we haven't heard from them recently, and obviously the markets have taken that gap in the communication as a reason to price in a higher probability of a hike. But I do still think there's a non-trivial risk that they don't hike, that they actually hold. But anyway, let's just say that they do hike rates. Given that they haven't really sounded that hawkish just back in December, which is a couple of weeks ago, I think the risk is that they don't, even if they hike, that they won't sound as hawkish compared to what the markets have already priced into the Aussie as well as into rates. So I think if they do hike, the risk of a buy the rumor, sell the fact reaction in the Aussie looks like a fairly high chance going into next week. Not a trade that I'm looking to take advantage of now, but definitely something that I'm keen on taking advantage going into next week. Now, in terms of commodity market, geez, these moves are just relentless. New all-time high for gold. We got very, we actually hit that 5,300 level a little bit earlier. Absolutely amazing moves we've seen. The volatility though it's scary at these levels, guys. It's not just, it's obviously not just looking at gold, but specifically silver. Even, it's not crazy levels here, but even oil volatility, OVX is trading at close to 50. You've got gold volatility trading at 28. You've got silver volatility, implied volatility that is trading at 77. These are crazy numbers. They are ridiculously high, and it impacts things like hedging. It impacts things like liquidity and obviously trading costs. So when things get this crazy, you want to be really careful with how and when you trade, because these things can rip your face off, both to the up and to the downside, if you don't know what you're doing. So, just be careful. Don't try and be a euro with these types of moves. It can get really nasty real quick. Now, in terms of the day ahead, obviously we've got the BOC coming up as well as the FOMC. In terms of overall expectations, to be honest, guys, there's not a lot of expectations coming into these meetings. Both of them expected to be a bit of a nothing burger, to be honest. Really no reason for either one of these banks to really change their language at all. In terms of the US, we can see that there is still close to 47 basis points priced in by the end of the year of easing, that is, but there's absolutely zero chance that is happening tonight. Also, similar story to the BOC. The market was a lot more aggressive in terms of hikes just a couple of weeks ago, pricing in, I believe at some stage, fully pricing in a hike at some stage, and now we're down to 9 basis points by the end of the year, and you can just see how flat this curve is. There's really nothing to get excited about. In terms of the Canadian side specifically for the BOC, yes, inflation was much lower last week, but you've got labor, which is looking slightly better. Growth is looking okay. That doesn't really allow them to change anything. And you've got the ongoing risks of the USMCA negotiations in the background. So they just have zero incentive to do anything. They have all the incentive in the world just to kick the can down the road. Now, for the Fed, again, nothing really expected there. Inflation still above target, unemployment remains low, growth remains great, earnings remains good in the aggregate. So there's not much to do for them in today's meeting. But where the meeting could get a little bit more spicy is if Powell decides to, take a step into the political arena and basically double down on that speech we had from him a couple of weeks ago, where he obviously tried to defend central bank independence and obviously just trying to push back against some of the attacks raised against him and his colleagues from the US administration. So does he take a step out? Does he sound a little bit more aggressive in that sense? That could be interesting. If there's anything interesting from that coming in from Powell, that's probably going to be it. In terms of overall policy, we are just not expecting anything sexy from them. Now, what could be interesting though, and as my good friend Michael Brown alluded, there is also the risk that Trump could potentially want to, announce his or assert his dominance, if you will, and name his pick for the new Fed chair during the presser, which it'll just be hilarious if that happens, or directly afterwards. So that is something to watch. He did say yesterday that his choice for the Fed, he'll make the choice shortly. But I mean, he's been saying that for the last, 8 weeks now. But anyway, that is a risk we need to watch going out of the FOMC. The other thing we need to just talk about as well, on top of the potential comments from Trump, is when it comes to dollar yen, just watch dollar yen from an intervention point of view after the FOMC as well. It won't be the first time that the Japanese officials basically uses a major risk event as a possible trigger for intervention. So watching that will be important regardless of which way the dollar goes afterwards. If the dollar pops up, they could, or dollar yen pops up, they could potentially use that as a trigger. If it drops, they can use that momentum in their favor. They have done it before. So it is a risk just to be aware of, that dollar yen for possible intervention, regardless of what the dollar does going out of the FOMC. So with that said, it's going to be a busy one ahead for us today. So good luck. Have a fantastic one. And any questions, don't hesitate to let me know.